Hey everybody, hey traders. It is September 4th, right after 5 p.m. Eastern time. Just want to do a little video update based on where prices are at today. So SPX, we've had a pretty indecisive day, which is totally fine. But to me, this looks like the following type behavior. We had a nice daily close on Tuesday. Today was a bit of a retest of that level. I'm actually looking to see if there's more pressure to the downside, gap fill potential, come back and retest these levels. I have some volume profile levels that I'm interested in watching right around this 54. This is around 54.70, 54.50 or so. Support around 5400. So I would like to see, tomorrow, what do we have? We have unemployment news. We have ADP non-farm. We had a big miss in JOLTS job opening today from the U.S. showing again, maybe there's some concern in the labor market. And then we have non-farm on Friday. So if this September effect is really kicking off quickly, closing below this support level that we had for about 9 or 10 days, pressure remains to the downside. We have some gaps to fill. How bearish does it get? I'm not really sure. I could see the bulls acting pretty supportive around 5,400 on the SPX. I could also see something a little bit nastier where we go high to low, lower high to lower low, and we actually come back in and test these levels. Of course, it doesn't have to be that perfect, and it probably won't be. But if we have a lower high and we have a higher low, I could also see this volatility as we get into the election season, which is maybe there's no direction, right? And then the market has to make a big decision, come November or come October, November, we'll see. But there could be some optimism going into the September rate decision, maybe, unless the market thinks that the Fed is behind and their cuts make no difference because we're already in a recession. Maybe that's the case, but I don't think it is. So we'll find out. But that's where we're at for SPX right now. Pressures to the downside still, we're below a tight moving average, and we've got some volume levels that I'm seeing just more space to the downside plus some gap fills. So Qs, same type of thing. Tuesday, nasty candle, come back in to fill some gaps. Volume profile on the QQQ gets us around 440. Volume profile on the NDX. See if this one pops up here. I would imagine somewhere around this like 18.7, 18.6 zone. See if that pops up. If not, I go to futures. Let's go to NQ here. See if I get there we go. So NQ, big level around 18.3 with some open space. I mean, this area isn't super busy. So getting into like the 18.5 zone, 18.3 zone, I could see price gravitating towards those levels. The bulls on the NQ or the NASDAQ, we'd have to break this level. In order for me to say we're going bullish, I want to see price go higher. We've got to go higher. If that's not the case, I'm putting, pressure on the downside right now and looking to see how much lower this Q situation can go or the NASDAQ can go. If we end up testing the August levels, maybe it's something like this, if we make a lower low, right? Or like I said previously, maybe this is a higher low, lower low, or I guess it'd be a higher low, lower high, and we have more of a wedge trade going into the election. So a couple scenarios there that I'll be watching. Oil, last couple days has been pretty rough on oil, but we are coming into some decent support. I will be watching some of these chart alarms at 68 and 65.50. I will possibly put on some credit spreads on CL, which is crude light, maybe going out 30, 45 to 60 days, put in a couple of bull put spreads. Natty gas, we're trading sideways. I want to see if this comes back and revisits the $1.50. Gold, resilient, but not moving a ton. Gold futures, same thing. Silver futures, watching for this. Lower highs, but equal lows. This is resistance around 26, becoming support. I really get aggressive on silver if we get above $30. Otherwise, this could be just chop and accumulation, and that's the case. I'll get more aggressive there when it's time to strike. Bitcoin, interesting spots. If my volume profile pops up here, look at this big one all the way down here towards 43,000. Let me zoom out a little bit. So right in here, I guess that's not as big as I thought. Well, there we go. I was going to say we had something in like the 40K zone. There's a lot of structure right in here around 43 to 40,000. I'm not super bearish on Bitcoin. I think this is still an accumulation phase. We had this huge rally. There's stability here. I guess the only issue, I keep saying this, but the SPY's made highs, the Q's made highs, the Dow made highs, the Russell's better, but it's not quite to all-time highs. But Bitcoin is just sideways. Now, there might be another bear trap in Bitcoin, before there's another rally. To me, I'm way more bullish if we're up above the structure and looking to go like straight rip to the upside. We'd have to break all these highs at 74, 75K for that to be the case. But if that is the case, strategies like crazy, call options, credit spreads, all sorts of stuff that capitalize on some directional play there. What else do we have here? Japanese yen. Japanese yen, this is the 6J, so the Japanese yen futures. Really nice move the last couple of days. We've had a pretty decent pivot on the Japanese yen. The Nikkei 225 also shifting hard to the downside for the last 2 trading days. Certainly with a gap and a push lower. This does bring that potential risk back into the market, where maybe people think that there's still another leg of deleveraging the Japanese yen and the carry trade is going to unravel. If that's the case, we got to pay attention to that, because in the currency world, that's causing a lot of risk-off trading. If that's risk-off trading, we see lower moves on the indexes. Right now, the indexes and alignments that I see are pushing to the downside. Elsewhere, we have the DAX. So German market down with a pretty healthy gap to the downside. The FTSE down on the last couple of trading days. Hang Seng for China down the last 3 out of 4 trading days. Brazil pulled back a little bit. Mag 7, nothing crazy that I see there. Being pretty stable on the Mag 7. I did have some trades like Lululemon. I was assigned a trade. I just got stopped out on a bull put spread that was assigned. I still have a bear call spread. I'm looking to see if I get below 242 or 240, and I'll make some profit there. I'm still in NVIDIA with the bear call spread, and my bear call spread is around 120. So if it stays where it is right now, then I can generate some full income there by the end of the week. I had some assignments on CRM and CRWD last week as well that I'll manage for this Friday's expiration. We also are sitting here on the 2 and the 10 year. We are barely, in fact, today I saw this earlier at 3.78. We're right on that verge of we're no longer inverted. Now, timeline wise, I don't know if this means anything. Maybe it does, maybe it doesn't. Maybe it's kicked down the road. Maybe when the Fed actually starts cutting, does this affect the yield market? And if so, does the 2 year drop faster than the 10 year, or does the 10 year drop faster than the 2 year? I'm not really sure. But we may not know this until September 18th, when we see the Fed making those cuts or making that cut. Is this going to shift the 2 and the 10 to officially get out of that inversion? Or will this be another steepening where the 10 drops lower and it's still sitting slightly inverted beneath the 2 year? Not sure. One thing that's kind of exciting is I've watched this drop from around 6.9 to around 6.35. That's the 30-year fixed mortgage. So rates are coming down. There's still probably another 100 to 150 basis points to cut over the next maybe 12 to 16 months. And I think that's a good sign for home buyers. I think it's a good sign for refinancing any type of longer term debt. If you're looking for something in the automotive space or student loan refinancing or something in housing, of course, this could spur some activity over the next maybe let's say 6 to 12 months. It's not easy if the economy's going in the crapper. If employment's getting higher and things are getting softer, there's going to be a slowdown across the board. But believe me, people that have the ability to buy homes are going to be buying homes. People that have the ability to invest in assets are going to be investing in assets. This is what's created a lot of disparity over the last 20, 30 years and pretty much forever in mankind in financial markets. But over the last 20, 30 years, especially with some of the booms and busts we've seen in the market, it would be interesting to just think about this. Pressure to the downside on the major indexes. I recognize that. But how much more pressure to the downside, I'm not sure. Because as much as I say, okay, maybe this is a lower high and this is a higher low, maybe it's indecisive here, okay? But we could blow this top off and still be bullish and do what the market is going to do, which is go higher. Why do I say that? Because everybody right now with the September effect, everybody right now with employment, everybody right now with the SOM rule, everybody right now with the inverted yield curve, everyone is screaming recession. And that's just usually not how the market behaves. Usually it is a bit of a contrarian play where everyone gets burned until all the bears are exhausted and the market goes up irrationally until they say there's essentially a bull market now, and then boom, change of course. So I could see some support being built and justified. I could see some choppiness in here, but I will be ready. I'll be trading for active income or whatever I can get my hands on. But longer term, I think as long as the bears are not threatening too severely, that there's support in here. Okay, there's support in here. And if all this structure ends up breaking, then sure, we have some more damage to be done. And that would just make me question, okay, we're not coming back to all-time highs by the end of the year. But if we stay right in here around 5,400, I think we get back to the highs and go higher. right? We could see this type of pattern where it's down, up, pull back, and then we break the highs, and that's your blow off top. This could be just a big cup and handle. This could be a big head and shoulders. We break the neckline, we measure the move. We're talking about this SPX up above 6,000. So lots to forecast. That's my job. Let's keep grinding on it. Okay. So that's it for me. Happy trading, lots of profits. I'll see you soon. Thanks. Bye.